Welcome to A Course to Retirement with Grand Rapids Certified Financial Planner Ron Corser. Ron Corser and Associates are planning today for the potential of tomorrow.
And welcome into the program. This is your Course to Retirement with Grand Rapids, a resource for a common sense approach to planning for our financial, investment, and retirement futures. He is president and founder of Ron Corser and Associates. He is a certified financial planner, CFP Ron Corser here, providing the guidance and insight. Ron, welcome back in.
Well, good morning, Peter, and good morning to everybody listening to today's program. We're going to talk a lot about a four-letter word today, and that four-letter word is called risk, R-I-S-K. And I almost want to start off with the Wizard of Oz saying, lions and tigers and bears, oh my, look out, here come the flying monkeys and everything. But we're entering, and we already have, but we're getting really up to our eyebrows, into a lot of unknown things, a lot of fear-mongering, a lot of things to be concerned about that really have some substance to them, and just waiting for the mainstream news media to tell us what we should fear. I read a couple articles last week. Anybody looking at me, they wonder what's going on with me. I had a little surgery on my neck.
Those listening wouldn't tell any difference, but those watching on the podcast, on the video, obviously see your apparatus there around your neck.
And I just, I kind of look at like I'm beginning to be one of those Star Wars soldiers or something. But it's interesting, you know, I read a couple articles last week when I was at home, and they were talking about manufacturers in the grocery industry gearing up for another set of panic buying, if you will. And I talked to some of my friends and clients in the grocery industry, and they're not of that accord. Their response was simply, it sounds like people are just trying to stir the pot and get everybody aggravated. But you know, it is fear, it is risk that cause human beings, all of us are subject to it. And it causes us to do some interesting things sometimes. And sometimes maybe not in our best interest, but we do what we think is right for ourselves. So we're going to talk about risk. We've talked a lot about that on the program, financial risk. I'm probably going to touch on some of the more risk items that may be closely following the election. I'm not going to get political, but there are some things out there that people talk to me about, and they've asked for my opinion, so I will share it. But up front, I'm going to say this is an opinion. It's only opinion. If this had been a real crisis, you might have heard something else, but don't worry about it. In a nutshell, this is what I tell folks. We're going to have more We're going to have more volatility. We're going to have more fear-mongering. We're going to have more uncertainty. We're going to have all of that. Why? For a lot of reasons, but it's going to be there. So what I tell people is be of good cheer, take a deep breath. I remember going back into 1999 when Y2K was the biggest fear we had, that the computers were going to shut down, the grid was going to shut down, and we're going to go back into the Stone Age.
Certainly,
and I was one of those guys that responded to that. I actually bought a generator, and my brother thought I was the dumbest brother he could ever have because he didn't think it was going to happen. And my neighbors thought I was a little goofy too. And guess what? They were right. I got the generator, I got my house wired up for it, and I didn't need to use it. So they were right. But here's the really cool thing. Over the last 20 years, I've used it 10 times. And only me and one other guy at the end of our neighborhood have generators. So when we've lost power in our neighborhood, everybody has to get out of Dodge while we have warmth and electricity and stuff. So things work out over time. But that was a very fearful time. And it didn't happen. I'm not saying it won't happen. You know, and then we think about it, we went into 9/11, and we kind of got a taste of what happened this year in that we shut the country down and we shut the markets down. We only shut them down for about 7 to 10 days, but it was a bit of a disaster. But we got through that. We got through that. You know, and then we went into the 2008 crack up. And why I bring that up is not to scare people, but the Y2K, 9/11, in 2008, what do they have in common? They were all events that we call serious black swan events that came out of nowhere. Nobody had ever experienced them before, and we didn't know what was going to happen. And I have been told, basically on things that I read, that we came within about 72 hours of having the world's financial system flat out shut down in 2008. So that was another time when we were right on the brink, so to speak. But things worked ultimately to get us out of it. So now where are we? We're in this most bizarre year, perhaps, of our whole life, 2020. We've had great markets, the virus, fear, uh, frankly, from any point of view, horrible political discourse. Uh, and nobody knows what's going to happen down the road, but people are frightened. There's some basis for that emotion. And also there's some basis that perhaps we need to take a little bit of a deep breath and just kind of back up for a minute and say, what could really happen? Now, there are people all over that say the world's going to come to an end, the zombies are going to be out there, and it's going to be rioting and pillaging and everything. I don't know. I doubt that. I suppose in the realm of possibilities in human existence, it's always there. But what I want to cover this day here in today's program is talk about financial risk, but we'll also dabble on some of the, what we might call the more social or political kinds of risks that people have on the front part of their mind. And I get asked these questions by clients, so I'm not just going out in the left field. These are things I'm being asked to comment on, and I tell people very clearly, this is just my opinion of what I see and read. Yeah. So like all things, it's an opinion. Take it for what it's worth, considering the source, I guess, is the best way to approach it.
Well, Ron, all of those items, those events in the timeline that you just shared and reviewed, I think the main thing that all of them have in common, aside from kind of the black swan event, those things that came out of nowhere or that we couldn't foresee or expect, was that they were surrounded by fear, by a lot of angst and anxiety and worry. And we as humans cannot overlook the fact that fear is a very powerful motivating factor. And especially when it comes to our money and our financial decision-making with those specific events, it actually motivated a lot of people to make financial decisions. And I'm going to go back even further to 1987 and Black Monday on Wall Street, where the index lost more than 20% in a day in October. To this day, I mean, think about this, 1987 till 2020, October is still considered CD replacement month because in 1987, so many people jumped out of the market because they were fearful right at the wrong time, in retrospect, in hindsight, and went to safer alternatives in CDs. And I think that also speaks to kind of the motivating factor of fear. Certainly, we don't like to see ourselves lose money. Certainly, we don't like to see market volatility. But when it occurs, Ron, we seem to make the wrong decisions at the wrong time. And again, we're talking about more than 30 years of time here where the implications, ramifications, the ripple effect of those decisions are still being felt in the fact that people are still repeatedly renewing CDs in October as a result of an event back in 1987.
Yeah, that's consumer behavior. You know, it still gets down to why are people doing that? And there's a really fundamental reason for that. As investors, we like the idea of safety. We're willing to pay a price for safety. You know, if we think about it in a worldwide economic forum, the safest economic financial instrument in the world is the United States Treasury bond. Now that should bring a smile to your face that given what you know about our finances in this country, the Treasury bond is still considered to be the safest financial vehicle out there, which really says, wow, what about all these other bonds and currency things? I tell people with a smile on my face, think of the United States Treasury bond as the very best house in a really, really bad neighborhood on the south side of Chicago. But as long as people think that it's the safest place, institutions, other governments pour into Treasury bonds like they did in March when we shut down basically the economy. So there's an element of safety that sometimes gets overlooked in our industry. And it's really easy in looking through the rearview mirror saying, yeah, I should have stayed in the market, shoulda, mighta, coulda. And that comes down to a simple thing. We've talked in this program about one element of risk called sequence risk. And that's the risk of you losing money in your retirement plan 3, 4, 5 years before, right after you retire. It's a deadly risk. It can absolutely cripple a retirement plan. So sometimes when people get out of the market, they do so because they want to avoid this kind of risk. And in our firm, we actively put part of the planning process is focused on sequence risk. What do we do if bad things happen all of a sudden? What's the plan? How are we positioned? So we actively go after that kind of risk to minimize it. So people get harmed in two ways. Yeah, they may get out of the market early, but if you're taking money out of your retirement plan, you have to be very, very careful how you manage risk. If you never, like Warren Buffett, he doesn't need a single dime out of his billions of dollars. So he can lose 35, $40 billion. It's no sweat. Most people can't do that. So you have to be very careful on how you look at the broad idea of risk and how do you manage it in the market. I tell people there's really no wrong or bad decision to make. You can get out of the market if you choose. And we had folks that pulled out in March because why? We had never shut down the economy. That had never happened. Don't tell me that you knew in advance how this was going to turn out. Please don't tell me that.
All right.
So you make those kinds of decisions. Now, we got people back into the market. We maybe didn't do it exactly on time or the right time, but we're back in going in the right direction, I think. But it's still the idea of managing risk. You can be a buy and hold investor. Are you managing risk? You're managing whatever risk you have in your portfolio. Whether it goes up or down is irrelevant. You're just going along with the flow, so to speak. But there is a thing called sequence risk, which is deadly in retirement. There's withdrawal rate risk and other kinds of risk that you have to manage in portfolio construction and in managing your life savings. So that's important. So when we get to the other stuff now that we're going to talk about, what's on everybody's mind? This election. Good Lord, I have no idea how it's going to turn out. I really do. I just, I read a lot. I try not to get too exercised. Everybody's an expert this time of year. One of the things that's interesting is I think is most of us really hope for the best for our country, for our children and grandchildren. Most of us don't want to see the absolute destruction of our country. I don't. But I'm a realist too, that there's a lot of things out there going on that we really have no control over. So what are we going to do? We're going to talk a little bit about some things that come up. People ask me, Ron, what's going to happen? What's going to happen? We're going to have an election. What's going to happen?
Yeah.
And I tell them, well, first things first, give me a call on the phone and we'll talk about it. And anybody listening to today's program, do the same thing. If you want what I consider to be a reasonably objective opinion, just give us a call at 616-301-2593.
How about stop, back up, and say, just give us a call and we can talk it over.
Okay, just give us a call and we can talk it over.
And let me jump in with a number.
Okay.
Yep. And that number, ladies and gentlemen, to reach Ron Courser and Associates and Certified Financial Planner Ron Courser is 616-301-2581. That's 616-301-2581. 616-301-2581. So Ron, you've brought up fear and you did approach the topic of how you handle managing clients' assets there at Ron Courser and Associates. And some adjustments were obviously made during the beginning of the year and the onset of the coronavirus and COVID-19. Do you make adjustments for something like the presidential election? Do you discuss this and the possibility of different outcomes with clients and then interject what we believe might happen into the aspects and the angles we're taking on our planning?
That's a great question, because what it really requires is I'm a fortune teller. I can tell what's going on and it's going to happen. Here's how I try to help folks understand. A couple things going on. We still have a lot of people working off site, particularly in the financial services industry. And we're working off site too, partially on and off. But the companies that we interact with are a lot of them are off site. Now, one of the difficulties we all understand is working off site creates a time delay. That people are just not able to react as quickly to certain issues or things that they have to. It takes a little more time. And in a tight race that we have in this political world, one of the things that we have to understand is a lot of the worst workforce at the biggest banks and investment firms, they're also off-site. Now, they can have the greatest technology in the world, but they're also off-site. And it's been estimated that potentially, and again, put this in quotes, potentially, we could have 8 times the volatility going into this election week that we have now. Well, more of that will create more problems. If we saw that in March, when the markets just started to go crazy and the economy was shutting down, there were some investment sites that shut down 2 or 3 times a day. Now, they were the smaller ones that are more internet-based. It happened. With our own firm, there were always delays. Some were small, some were light, but we had to work with that. So I tell people one of the consequences of moving into this absolute voting situation is it's possible to see spike volatility in the markets. What that means is that there's going to be more need for people to talk, to call, to make changes in the portfolio. People are going to be making changes, buying and selling, betting on which way the market's going to go. That in and of itself can create a problem. And the problem is this, is you may want to make a decision to make a change today. Let's say today's 3rd of November and you want to make a change and you want to do it right away. That may happen. It may be possible. We're hoping it is. But there may be a slight delay in exercising a trade or making a major change to your portfolio. So that's one of the things that we have to take into consideration. If people are thinking about making decisions now based on however they think the election season, this election event is going to impact the markets, probably the time to start doing it and thinking about it is now, not on the 2nd or 3rd of November.
Now,
and whatever's going to happen, happens.
That's interesting, Ron, because I've recently read an article talking about how Wall Street is gearing up for a significantly anticipated higher volume of trading activity on election night specifically. Now, I think that maybe institutions can somehow pull this off, but the average investor with money in the market is not going to be able to make split-second trades overnight that are even going to be accounted for until the next day, if I'm not mistaken. Is that correct?
That's pretty much correct. The ones who should be able to do that are the ones that are individual traders that run their own portfolios on certain platforms that, they can buy some sort of derivatives contract, options, calls, puts, whatever they want to do to bet. And it is a bet. And when you make a bet, you have to understand that there's a good part to it and there's a not so good part to it. And we'll probably hear about a lot of bets that turned out well. We'll hear very few about the bets that didn't turn out well. But I think for most investors, the ones that aren't active daily traders, so to speak, if somebody's going to make a change in their portfolio to take advantage or to reduce the impact of whatever event they see coming, the time to start thinking about it is sooner, meaning now, rather than later. Yes, you run the risk then of running into something else, but it's a decision you make. So I just caution people to say, I tell them I think there's going to be more volatility going forward. I don't think that's a hard case to make. And the question is, what are we going to do? So everybody should take a look at their portfolios. For those of you who are clients and listening, I know a lot of you do, and you have a concern, and we may have talked about it last week, call again, 616-301-2581, 616-301-2581. We can never talk too much about your money. I really mean that. It's our job to help you. So at least we can figure out a strategy or just say, okay, I'm not going to be concerned about this. I'll be more concerned about something else. But volatility creates opportunity, but it also creates risk. And you manage that basically anticipating it on a longer term basis than responding to something overnight.
616-301-2581. Once again, that number, 616-301-2581. Or you can go online, roncourser.com, roncourser.com. Now, Ron, I understand that this event is something that could make an impact and move the market, but unlike some of those other events that you talked about, we have regular cycles of elections. I mean, this is not an unforeseen, unknown event. The outcome, we don't know precisely, but there's this theory called the efficient market where kind of all information is already cooked and baked into the pricing that we see. So how does that compare and contrast to what market movements and jolts we might see as a result of election night, and stepping back from that, how should the average investor approach that kind of information where we can see it coming, I feel one way about it, but it could go a completely opposite direction? It's hard to bring those two things together, I think.
Yeah, I probably won't plant my flag on the efficient market issue.
Okay.
I don't believe that all the information in the known world is baked in to the market at any given time.
Okay, and I've actually seen another set of recent articles saying that the efficient market theory probably does not accurately reflect today's fast-moving information society and world we live in.
Yeah, you can make an argument for each case. I just think in our own country of 330 million people, how do you know what all 330 are going to do on anything? You know, whether they're going to buy bananas today or not. So I think it's pretty hard to put in that efficient market issue and say, okay, we know everything there is to know. I just think you have to take a look at what you see going on around you. And here's the other part. Everybody has their own financial plan, or should have their own plan. So you have to make a calculation, don't you? I have a plan in place today. I think it makes good sense. We've talked about volatility, uncertainty, and things. It's going to give me the income I need. Now, going forward, when I look out across the sea of the future, do I think it's flexible enough or resilient enough to manage whatever increased volatility or uncertainty may show up? Now, there's no way to answer that perfectly, but you can also make the assessment that, look, I have taken a pretty good look at this. Maybe you're our client and we've gone through this because we've done through it a lot. You know, are we positioned for the future, not knowing what's going to happen? And if we've said, look, we're pretty well positioned for whether it goes up or whether it goes down, nothing's going to be perfect. Maybe that will give enough courage to all of us to take a deep breath and say, you know what, I'm not going to sweat some of the details. I think I got a good plan in place right now. We've weathered this crazy, crazy year so far. I think we're going to be okay. But if you're our client, you also have the opportunity to make changes down the road whenever you feel you have to. Because I tell people this is your money, ladies and gentlemen. It's not my money. It's not the broker's money. This is your money. You do exactly what you want to with it. And like all of us, when we make decisions, we live with the results and the consequences. So I tell people, here's a great way to figure out if you know what you're doing. Think about the worst possible thing that can happen, the worst outcome. Okay, now that you've thought about it, if that really happens, can you live with it? And for those of you who said, yeah, I think I can, like that song says from a long time ago, don't worry, be happy. You know, don't sweat it. Because you thought, because most of the time, the worst case scenario never happens. It's just in our minds. So
in our minds, yeah.
Yeah. So if you want to alleviate some of that stress in your life, give us a call, 616-301-2581. We can answer your questions as best we can. If you want a little kind of a review, we can do that too. We can help give you some peace of mind as to how you're positioned today and how we think this is going to work out going forward.
Well, Ron, I think that's a great segue to back up from the specific discussion of the subject of the election and talk more universally about risk, how much risk we should be taking. How do we quantify that risk? And how do we know if those two things align in our portfolio and with our money and investments? And that's part of the process there at Ron Corser and Associates. That's part of the job that you as a certified financial planner and your team of associate advisors help individual savers and investors better understand and determine with their own unique set of circumstances and situation. And this is one of the most vital components of the foundation and the structure of your planning, ladies and gentlemen. If you need help with this, if you feel at all uncomfortable, if you'd like to have that conversation with a certified financial planner, Ron Corser makes his time available to you. And I highly encourage you to have that conversation with a qualified, experienced professional about the risk that you're taking and make sure that it aligns with your goals and your timeline and your expectations for returns and your need for income in the future. 616-301-2581, 616-301-2581, 616-301-2581. And Ron, this is not something that it makes very obvious and apparent as soon as we open up our statements. The average investor probably does not have a full grasp on the amount of risk they are taking or how their portfolios and their dollars could be impacted by events as they unfold.
You know, that's a good thing to talk about because most people don't, and it's not because they're not smart enough. It's because they haven't given the right kind of information on which to make those decisions. One of the things we do, for example, if somebody's new to our firm, is we do a complete portfolio analysis. We send it back to our back office through Morningstar. We do a complete risk assessment. How much risk do you have? We're able to show you how to measure risk and what kind of risk. We're able to say, well, let's stress test your portfolio. This is before you ever make any changes. What happens if the market goes up? What happens if the market goes? What happens if interest rate changes? What happens if we have a financial crisis? So we can actually take somebody's portfolio, stress it, and go through the whole thing and say, here's where you are. Now, one of the great things I talk about, and if you want this kind of an analysis, give us a call, 616-301-2581, 616-301-2581. The more you know about your money, the better decision you're going to be able to make.
Well,
Now,
this is a vitally important component of that. And let's talk more in depth about that, Ron, when we come back here after the break, because it's just one aspect and facet of the planning, but it's maybe one of the determining factors of our financial future. How much risk we are taking, how can we determine if that level of risk is appropriate? It's just part, again, of the process. The risk that you're taking, the fees that you're paying. We talked last week about the taxes that you may be liable for and how to better control that. Being more efficient with your taxation is probably far less risky and many times as effective as shooting for higher returns and taking more risk. How can you translate and transition the lump sum that you've worked so hard to save and accumulate into the foundation for a stable, secure, reliable income in retirement? All of these facets are talked about in the planning review and the strategy session, and you can take a certified financial planner up on the opportunity to do that for free. There's really no downside for placing this call. There is no cost or obligation. Just pick up the phone and give Ron Corser a call, 616-301-2581, 616-301-2581, and we'll take a deeper dive into risk, how to quantify it, how to measure it, and how to make sure that it's appropriate when we come back here on Your Course to Retirement right after this break. And we're back here on Your Course to Retirement with Grand Rapids certified financial planner, president and founder of Ron Corser and Associates. He is CFP Ron Corser. And today we are talking about risk in the financial and economic world, risk in your portfolio. How much do we need to take? How can we gauge if it's appropriate? How do we know what risks we are facing into what is, quite candidly, a very uncertain future? And Ron Corser has helped savers and investors in and around and across Grand Rapids navigate these questions for more than 2 decades. And if you would like the help and the assistance of a certified financial planner, pick up the phone, give Ron Corser and Associates a call, 616-301-2581, 616-301-2581. Ron, we set the stage a little bit, speaking specifically about the election. Certainly something that we're worried is going to bring volatility to the market. Why should I have a risk assessment? You know, if I'm concerned about this, if I'm concerned about other factors in the financial world, how is a risk assessment going to be beneficial in laying the foundation and the stepping stones for my financial plan and path forward?
That's a great question. Let's take a look at it from a 30,000-foot point of view. We have risk in our everyday life. So we know that if we're homeowners, we're going to have house insurance, because we don't want our house to burn down or a tree to fall on it. We have car insurance. We have medical insurance. Some of us have life insurance. We have disability insurance, long-term care insurance. We have said those are the risks in our life. We need to deal with them. And you make a decision to deal with them. The same thing goes with your portfolio. Now, one of the questions people ask me about the election, and one of the things I tell everybody is I think we're going to have continued and maybe increased volatility up to the 3rd of November and even past that, because a lot of people are saying, we're not going to know who wins the election for 3 days, 3 months, who knows how long. One of the things the stock market hates, absolutely loathes, is uncertainty. So if we get into a period where we don't know the outcome of the election, and there's all kinds of yelling and screaming and lawyering going on, that could bring even increased volatility into the markets. What that means is to having a risk assessment of your portfolio today makes even more sense, doesn't it? If you know the kind of risk you have in your investment strategies, you can see them, you can measure it and quantify it. You're in a much better position to make a good decision going forward. It may be that you'll say, you know what? I have less risk than I thought because of what Ron Corson Associates did. I'm good. Or you may say, holy moly, I didn't know this could happen. Maybe we need to make a change. But anyhow, knowing is a good thing. Whether you want to stay the course or not is another issue. But I think we're going to have increased market volatility simply because of uncertainty. The stock market and those guys down in Wall Street, they really, frankly, don't care all that much who wins. They just want to know who wins, what are the rules, who do we have to support to get our way. That's kind of a, yeah, well, anyhow, I'll leave that comment where it is. So if you want to know what the risk is in your portfolio and compare it to what you think is coming down the road, give us a call at 616-301-2581, 616-301-2581. We can and will help you with this.
Ron, will that risk assessment help me get a better handle and identify what dollars I should be taking risk with? In other words, I've got a certain account over here, another one over there. My money's sort of spread around in different accounts. Maybe that risk assessment could help me identify, hey, this larger IRA, you're no longer contributing to it, and it's really well positioned for retirement. Maybe not take so much risk there, and we're taking too much. Versus your 401k, you're still contributing. There's some inherent advantage to downturns in the market even, and it's a smaller account as of right now, so you're not truly exposing such a large percentage of your total assets and net worth to that risk, or vice versa, depending on the situation. But per dollar per account, helping us identify where and when we should be taking appropriate risk based on that conversation and assessment.
I think it gets to a more basic fundamental understanding of asking yourself this question: why do I have all these accounts, and what is the purpose of each one of them? What do I mean by that? You can have 6 different IRA accounts and they all have a specific purpose. Or you can have 6 different IRA accounts because nobody's ever helped you put them all into one bucket, so easier managing, lower fees. So it really depends on how you define the question. What is this money for? It may be, some people say, well, I have clients that do this is my vacation fund money. And there's a certain portion of the portfolio we have in a totally separate account. And we manage that much more conservatively because they're going to access that money 6 months to 3 years from now. And they don't want to plan a round the world tour and have less money than they started out with. Whereas now we can have another account that's going to be money that he says, you know what? I got all the income I need. We created an income plan. This is my growth bucket, so to speak. I can maybe let that rip a little longer. So it really gets down to what's the purpose of the money? And it's a question to ask yourself. I have all these different accounts, bank accounts, brokerage accounts, IRAs, 401ks. What's the purpose of it? Does it make sense to have 7 or 8 different accounts? For some people it does. Or should they be more consolidated? But ultimately, the risk in a portfolio has to be looked at in total. It doesn't matter if you have 1 account or 10 accounts. It's your portfolio. It doesn't matter where these different accounts are when it comes to risk. Where it will make a difference is how you manage the tax issue in these different accounts. That's when multiple accounts can maybe play a real purpose in life.
And
So
another risk in and of itself that I know we could discuss here on the program, we have in recent weeks, and that you do take time to discuss in your office.
Yeah. So if you want to know more about all this stuff, give us a call, 616-301-2581. Now, I'll say this to people. A lot of us are still hunkered down. We're doing a lot more Zoom meetings and go to meetings, even with clients who a year ago wouldn't dare to be on the internet. So one of the great things about it, it's an advantage of what we're going through right now. We're all learning new things. We can actually do this person-to-person meeting on a Zoom or go to meeting conference call. And people are quite comfortable being in their own home, talking about all the different things we've talked about so far on this program. So give us a call, 616-301-2581. We can meet in person. We have protocols in place to keep you safe, or we can do it with one of these awesome internet things here and have a great time in our life.
The ease, convenience, the wonder, the safety of technology really has helped us here through 2020. We've all had to grow and adapt to that. But of course, Ron and his team, they're fully capable of utilizing that technology to meet with you, run that review and assessment virtually, digitally, or in person to your comfort level. Pick up the phone, give a call, 616-301-2581, 616-301-2581. Ron, where does that conversation start? I mean, is there any rule of thumb that would help us determine, maybe generically, where my risk level should be and what would be appropriate for my situation? And then kind of from that starting point, progress from there?
Well, here's the difficult answer to that simple question. It starts with people like us asking you, our potential client, a lot of questions. You know, risk assessment is an important evaluation tool, but it has to be based on the person. We all have to really understand that no two of us are alike. We're all, God created us differently. So we have to make sure that whenever we're going to say, well, we're going to do a risk assessment of your portfolio, that we have a basic understanding of who you are, what you're trying to accomplish with your life savings, what you want your money to do, where you want to be 3 years, 5 years. I ask people this question quite often to help them focus on the future. And here's the question. I call it the $1 million question. Peter, let's imagine you're made the decision to work with our firm, and it's 3 years from today. It's the 28th of September, 2023, and we've been working together for the past 3 years. What would have had to happen over those past 3 years for you to feel good or comfortable with the progress we've made? See, when you ask a question that way, it allows people to say, well, what do I really think is important? What do I want to accomplish? And once we know things like that, then we can do what I call the mechanical part of the risk assessment to see if it lines up with you.
To me, Ron, it would be a little bit of a if this, then that kind of scenario. Well, if the markets have gone up and we've had a healthy economy, I would like to grow and prosper. If, on the other hand, we've had a volatile economy and markets are down, well, in that case, I would like to not lose as much as the markets and still have some stability. And so really that is part of your job and your teams with your management style and approach to help people identify opportunities and protect what's important, capture as much of the upside when it's there and present versus provide some guidance and protection to protect on the downside, which, you know, balancing that tightrope is difficult. And again, going back to the fear, what Dalbar and Morningstar and other financial institutions who study investor behavior have found is that absent of guidance of a financial professional, most people make mistakes and do exactly the opposite.
That's true. But to go back to your original question, you know, I think I'm fine and I'm going to be just fine because the market's going to go up or it's going to be the opposite. Both of those positions are valid. One's not right and one's not wrong. If you think that the world is going to be a nicer, kinder place, and it may be, and the market's going to continue going up despite everything, then does your portfolio line up with that, with the understanding that there's a potential downside to it, and can you live with that downside? Can you accept the downside results if it doesn't work? On the other hand, if you think it's a kind of a time to really draw back and hunker down, what does your portfolio look like? Does it enable you to do that? Or do you still have a portfolio that's swinging for the fences when you don't want to do that anymore? And most people, when I talk to them, I say, well, when you've talked to your advisor about these questions, what did they say? They said, well, they told me I'm not too risky. And my response, not trying to be cute or anything, is that, what does that mean? It's not too risky. Does that mean you'll lose 5% in a down market or 55%? Do you know? And then, is it important to know what might happen? So there's a lot of ways to approach it. The more questions we're allowed to ask you, the more that we can get to the point where we can kind of go through this process. I talk about it. We get rid of the goofy stuff. We get rid of the misconceptions, all of that, so that we can get you in a position where you have all the critical facts in front of you regarding your portfolio, your investment strategy, the amount of risk you have, what you're trying to accomplish. Because I really believe that when people have all the critical facts in front of them, they can make really good decisions for themselves.
Well,
With
again,
the
if you'd like to,
understanding that nothing's perfect.
yeah, absolutely. And if you'd like to gather those critical facts, if you'd like to review and assess the situation that you are in, where you are currently, and discuss your goals and how your dollars can work their hardest to help you achieve them, pick up the phone and give certified financial planner Ron Corser a call, 616-301-2581, 616-301-2581, or visit online. Ron Corser and Associates is online at roncorser.com, roncorser.com. Lots of valuable information, resources, tools, calculators, reports are available at roncorser.com online, or again, a personal individual look at your situation, 616-301-2594. Start with a 15-minute phone call. Just a conversation with Ron and the team there, and take it from there. You can get specific answers to your direct questions through that phone call. And if it's merited, if it's warranted, if you find that it could potentially be beneficial, you can go to the next step from that phone call, 616-301-2594. Ron, another big area in your office is you help people make the transition to retirement. And as we're having the conversation about risk, I wanted to explore the difference in that conversation when you're talking about protection of principal or assets, or risk to principal and assets, versus protection of income versus risk to income. Because I know that there's a change in paradigm there in the conversation at a certain point in time. And those could be two completely different conversations.
Yeah, they are, and yet they aren't. We always start a conversation ultimately, once we get through the discovery process and we decide to work together, what we first try to do is put together an income plan. And what do I mean by that? That's trying to figure out how much money you need every month from all sources, Social Security, pension, your investments, so that every month you have all the money you need to maintain your lifestyle. It doesn't matter if the market goes up, that'd be fun, or if the market goes down, that's not fun. You're always going to have all the money coming in. So we create that plan first. The income plan, in many ways, will kind of dictate what kind of investments or what kind of securities or what kind of buckets we should put that money in to give you the income you need. So that's the first part that we do. That's a little different than just saying, well, I'm going to create a strategy of 70% stock, 30% bonds and other stuff and be happy. So we create the income plan first. That income plan will cause us to use things that generate higher than, take it this, the S&P 500 has a dividend rate of about 2.5%, somewhere around there. Well, there's things out there that can provide 4.5% in terms of dividends. So we might combine some of that. We also use income annuities because it's like a pension plan. We don't shy away from that because it's so important to guaranteed income. Nobody wants to get into a situation 10 years from now where they have an uncertain amount of income coming in an uncertain amount of time, in uncertain times. So we kind of seal in that income part. Then we create the investment part, so to speak, the growth part of that. And that can be using a wide variety of investment ideas and strategies, that whatever fits the person. So it's really a two-part program that has to be welded together. And then on top of that, we create what we think is very necessary, the estate plan. Now, we're not lawyers, but I understand estate planning as a certified financial planner. It's important to have that in place, some very, very basic stuff, so that if something happens, illness, catastrophic events, what have you, you're not caught, so to speak, in a place where you wish you weren't. So we help doing that. And then on the other part, my wife, Nancy, and her team, they do the Medicare planning and the life insurance and long-term care planning and Social Security planning. Very important part of your overall financial retirement strategy. What kind of plan are you going to take in Medicare? What's the best suit for you? What kind of drugs do you have? What's your health concerns? What about a long-term care plan? Do you need help with that? So it is a really more of a holistic approach that we take. And they're all important pieces. Every one of them is important. Not one is more important than the other. So we do that. So if you're interested in that kind of planning, that really attempts not to let any stone unturned, give us a call at the office, 616-301-2581, 616-301-2581. Be more than happy to have a conversation with you, to be a resource to you, to help you in any way we can.
Ron, we've had a conversation today about risk and where the rubber meets the road in this conversation. I firmly believe your job is to help people manage their assets and their money. As a certified financial planner, that's your role. You coordinate those efforts with other aspects in the planning. But the bottom line is when we're talking about risk, it's a conversation about more than just money. It is about the lifestyle that we feel confident in living day to day, month to month, and with that plan in place for the foreseeable future for years and decades to come.
Yeah, it really is. It's not just about, well, the market went up 8% this year and I only got 6 and I'm disappointed. Or the market went up 20 and I got 25, I'm ecstatic. It really is, do you really have a plan in place that's going to sustain you for as long as you live? Now, it may be, if you're like Warren Buffett, he's going to be okay. He's about 111 years old now. He's got about 50 trillion gazillion dollars. He's not going to run out of money. But that's not the case for a lot of us. We could live a long time, and nobody wants to be in a position where they start to say, you know what, I have to give up something in my lifestyle to make my money last a little longer. So we can help people with that. We can help them to not be in that position of having to say one day, yikes, it didn't work out. Now I'm really in a tough spot. So give us a call. Be more than happy to talk. 616-301-2581. Be happy to talk with you.
Ron, this year has seen its share of up and downs and unexpected events. It's a year unlike any other year we've ever seen, but next year will be the same. Not maybe exactly the same set of circumstances, but there will be unexpected events. There will be forces that push the market in one direction or another. There will be volatility, and we've got to feel comfortable in our plan for handling that. And I think it begins with that conversation and that assessment and evaluation of the risks that we're taking and the outlook for the planning. And if we have not had that, where do we even begin to navigate this financial world that's so complex and so unpredictable?
You know, I'm reminded when Saturday Night Live used to be fun and I watched it all the time. And there was a character on there called Rosanna. And what was her great saying? You know, it's always something. And that's very true in our life, isn't it? It's always something. So I don't know what the always somethings are going to be in our life or in the world. But I do know one of the things we do well is we continue to communicate with our clients. We stay in touch with them so that we're able to say, okay, Rosanna was right. It was always something and something just happened. And we're able to respond or react or do what we need to do to help them. So I tell people, you know, the world is what it is. It never has been, and it seems like it never will be again, whatever we call normal. But despite the turmoil, despite that whirlwind going around us, we can have peace in our spirit and in our mind that the things we've done with our life planning, with our life savings, make sense. They're as protected as it can be. You're going to do as much as we want it to do. And it'll give us the peace of mind to be able to say, you know what? I can get through this. This is just another thing I got to deal with. I can get through it.
Ron, there's all kinds of different products and strategies that are out there and available in the financial world. And if somebody's got a goal to control their risk, reduce the amount of volatility they see, but still need to have that forward momentum and progress and growth on their assets, you do offer strategies and can have the conversation about where and what specific products are appropriate for those specific goals. And I think that is important to mention because people sort of think of this as the extreme ends of the pendulum. I either have to take a whole lot of risk and be in the market, or I have to decide that I'm comfortable earning 0.01% in a money market or a bank style savings account. There's a full spectrum. And you touched on it a little bit with some fixed income, with dividends, with annuities. But that conversation is something where we can find the ground where somebody, a particular individual, is most comfortable within kind of their sweet spot after the risk assessment.
That's what we try to do, and that's the key to it all. As an independent advisory firm, we're not beholden to any companies or anything. We don't get paid extra for offering to sell this investment or that security. We don't get paid extra from companies for doing anything. So our whole approach to this is really a very, very simple idea. What is it you need us to help you with? What is the best thing we can do to help you? What are the best strategies? Here's how you can make a really great decision for yourself, and we will help you every step of the way to get to the point where you're comfortable and have peace of mind.
Well, if you would like to go through that review, that strategy session, if you would like the help and assistance of a certified financial planner, a CFP, even if you just have a couple questions or concerns on your mind, want to get some more specific perspective, pick up the phone, give a call, start with a 15-minute phone call and conversation with a certified financial planner, 616-301-2581, 616-301-2581, 616-301-2581, or go online, roncourser.com, a great resource online, available on demand, palm of your hand, tips of your fingers, roncourser.com, lots of editions of the podcast in audio and video form available there. Different topics discussed in depth and in detail, reports, tools, calculators, citations to articles that are relevant to all kinds of different topics. You can start at roncourser.com or pick up the phone and give a call, 616-301-2581. Ron, this doesn't have to be a boring or dry conversation. It's about your future, so it's obviously important, but you make it entertaining as well each week here on the radio program. And I think that every person probably walks away from that conversation having a little bit of insight, a little bit better knowledge on what it takes for them to achieve their financial goals and a little bit more confident about their planning and their progress into the future.
Well, we try to do just that, and hopefully we're successful at it more often than not.
Well, if you would like that assistance, again, pick up the phone, give a call, 616-301-2581, 616-301-2581. The fees that you're paying, as we talked about today on the program, the risks that you're taking, the taxes that you may be liable for, how much you can expect or when and how to claim and collect Social Security, make an optimal decision on that. All of these things can be quantified. It's part of that conversation, that review, that strategy session, and then answering the questions of how much do I need to retire, when can I retire, what can I count on and depend on my retirement to look like. The burning questions about planning for our financial future can be answered and addressed with that strategy session with the help and assistance of Ron Courser. And whether you've got $100,000 or $10 million, you can always benefit from additional education and insight. Ron Courser here to help. 616-301-2581, 616-301-2581. Ron, we appreciate your time. I sincerely appreciate the guidance and the perspective, the help and assistance that you've provided here on the program. And I know all of the listeners across Grand Rapids have as well.
Well, thank you, Peter, and thank you for everybody tuning in to today's program. Drive safely when you're out and about today, and we'll look forward to chatting with you again next Sunday, same time.
Tune in to Ron Courser's full radio program, A Course to Retirement, Sunday mornings at 9 a.m. on WOOD, and visit roncourser.com for many valuable resources, including other great episodes of Your Course to Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.